Hey traders, welcome to Charts and Coffee, and for some of you, welcome back. We just did a little experimental live non-farm payroll session. Just if you want to catch the way that we did it, and again, it was just an experimental session. You can find it here at the Simple Trading YouTube channel. We just cut that live between 8:25 a.m., 5 minutes before NFP, to about 10 to the hour, so we could see the preparation before, how we choose directional bias, and then how we monitor how non-farm payroll is digested after the data comes out. So if you've always been curious, hey, how do you trade non-farm payroll? Well, first of all, carefully, with a lot of risk in mind in terms of what could potentially happen. But if you're curious about how my indicators and my process work on something as sometimes as haywire as not NFP, you can check that out. All right. But in the meanwhile, thank you as always for making it out to our Charts and Coffee session. We do it every morning between Monday through Friday between 9 and 9:20. And looking forward to this market finally figuring out, in yesterday's free video, I said, hey, we're stuck in a range. I mean, think about the frustration. A lot of you have been experiencing it. I have. The frustration of being stuck now in a range inside the waves easily for 4 sessions, now 5, if you include just getting up into this area and just sitting here sort of levitating and defying gravity. I don't know that I see the breakdown or the breakout happening as of yet. We will likely see sort of the echo effect into the 9:30 open from the 8:30 reaction that we saw from NFP. So that was clearly a bearish, although not catastrophically bearish, but it was a bearish reaction. And I would anticipate, again, probabilistically, that we should see more weakness. By the way, look at the weakness that we saw since after the UK open, since about 3 a.m. Eastern. We've been heading lower and lower. We headed lower into the Asian close. We headed lower through the 7 a.m. sort of first cup of coffee in the U.S. Open, if you will. And then non-farm payroll came along, and shockingly, we've continued on with that direction. One of the questions that I do get, we tackled this in that previous session, but I'll touch on it here a moment. And again, if you're curious about NFP and how we process it, do check out that replay. It should be really, really helpful. But when we look at NFP, and now what? Well, first of all, it's a mixed bag. Average hourly earnings, not impressive. Unemployment rate ticked up. Again, not impressive. Although we've been here before. We were at 3.6, went down to expected 3.5, and we stayed at 3.6. So it's steady. The only place where it's disappointing is what was expected. It's the same number as it was before. By the way, same thing with average hourly earnings. There were anticipation that it would be better. It just stayed steady, right? But what was, so you might say, well, steady, is that good or bad, Rog? Well, what's no change? It's not good. It's not bad. We wish it could have been better, but it's certainly not terribly negative. It's holding. And in this environment of higher rates, this gives the Federal Reserve something to stand on, just to the average hourly earnings and unemployment rate number, and saying, look, things aren't getting worse. That's pretty good considering we're raising rates. And then finally, we get not NFP, which was clearly bullish, clearly better than expected. In the rabbit hole that we're in right now, where good news is bad news, let's talk about what that even means. So good news, data reveals that employment is stronger than what was even expected. Not as strong as the previous month, which, by the way, was also you can see right here what this is. It was revised from 428 to 436. So the previous number was better than expected, and this number was clearly better than the forecast of 325. This is good news, right? More people have jobs. That's good news. Good news is bad news in an environment of a tightening cycle, because now the Federal Reserve, and if you take a look at who's scheduled to speak, we've got Brainerd, we've got the president. Should anybody be saying, oh, yeah, the economy's in poor shape? Forget reality for a moment, just on the data and how is this going to be spun. Brainerd, who is an influential FOMC chucklehead. They're all chuckleheads. I'm not picking anyone out. That's what the C in FOMC stands for. So these members now can go back, cite this data and say, see, things are all right. Onward and upward with rates. And that's the game right there, gang. So as always, this show is about your questions. So let's get to them. Kicking it off with Danny. Danny, good morning. We got a little stronger pullback on gold. Yes, right back to the zone of the Darvis resistance. And we've come back down off that. So yesterday, I did send out, here we go. Yesterday, I did send, where's my drawing tool? There it is. It's the problem with having 9 monitors. Sometimes you lose stuff on all the screens. We did have an alert taking advantage of this area here. We're back down below it on GC, and that's going to map to GLD opening lower as well. So I think we're in good shape there. That, based on what we see, this should reflect that real yields are starting to move up again, putting pressure on gold back to the downside. So as far as dollar index goes, usually I like to just go to the 6E, the euro, for that. One of the challenges with the dollar, and I think the dollar is getting to be a trickier play than gold, because right now there is a lot of discussion from the European Central Bank that they are going to come out of negative deposit rates. That's hawkish. That they're going to hike rates, maybe as much as 50 basis points. That's ridiculously hawkish for a fairly conservative central bank who does not want to really be hiking rates. No central bank really wants to hike rates. They're hiking right now because they have to. The inflation problem in the US is not isolated to this country alone. So if the European Central Bank is also hawkish, that puts pressure on the US dollar. And that's why we kind of see this holding pattern happening. So ultimately, and we talked about this during non-farm payroll, what was the trend that preceded the indecision, that preceded the chop? And if that trend was down, I'm always going to presume continuation. The higher probability assumption, it's an assumption, of course, the higher probability bet, right, is a continuation, never a reversal. Reversals happen. Certainly they happen usually on the words on the back of central bank monetary policy action or wording. So clearly we're in that potential environment, but I will always presume continuation. So that's my feeling based on what I see in historical reactions of the euro and the US dollar. And they really have to be talked about in the same breath, because one doesn't move without moving the other. And one doesn't move without moving the other when it comes to central bank tone and messaging. All right, moving on to next question. Thank you, Danny, by the way. Mark, how you doing? Starbucks has moved up with volume. Does volume make a difference? Yeah, volume is more opinion. Volume is, yeah, absolutely. Absolutely. So, it's as if we're in a room and 5 people agree on something versus being in a room and 500 people agree on something. Moves on volume are, in my opinion, and experience, more meaningful. And Starbucks was a pretty good downtrend, as were a number of stocks within the XLY. And with the rally that we saw at the end of May, a lot of names, including the XLY itself, did happen to rally. Now we're going to open more than we're going to open about 2.5 points south of where we are right now. We're going to open up closer to 155 than the 157 and change from yesterday. So we're going to open lower, and that should drag some of the symbols lower. But short squeezes and rallies within downtrends can be brutal. And I will tell you, this one was probably one of the worst that we've had in some time. This was a tough one, gang. It's not a matter of whether or not the market's going to continue lower. I don't believe that's a question. I do, based on what I see, market structures, my indicators, macroeconomic factors, I do believe down is the path of least resistance. But the scenic route that we often take in downtrends can stop us out of our trades. And that's frustrating, but it is just the nature of downtrends. Okay. So that's really it. That's kind of the frustration. That's really the frustration there. And then, as far as the difficulty that we have, let's look at some of the recent setups that we've been dealing with. Here's GM. And one of the ways, and GM and Starbucks, by the way, are both in the XLY. And these were two recent trades. And you can see, hey, gang, I'm never going to sweep this stuff under the rug. Yeah, it just didn't work. But you'll notice Starbucks, we did go full 3 triggers, which means that we're risking 3 to 5% of our account. Losses stink, gang. That's just the way that it is. But everything that we do in the room is designed to do what? It's designed to allow us to be wrong and not blow up. We're going to be wrong as traders. It's going to be difficult to trade downtrends. But the whole idea is when we are wrong, can we control position size and entries in such a way that we don't risk being down? You know, the catastrophic number for me is 45 to 50%. That's ruin. 0 is not a blown up account, gang. 50% is. So, you know, mixed in with the Starbucks trades and mixed in with some of the short trades that we've taken that have been under pressure and stopped out, we're also aggro only positions. So one of the things we do as we keep building trades is we'll say, you know what, we're going to go with about a quarter position size, maybe half position size. And at that point, now we're only risking about 1.25% of our account to 2.5. So when we're wrong, again, the idea is not that we're never going to be wrong and not that downtrends are easy, which they're not, but rather when we are wrong, that we will be able to come back from it financially. Now, psychologically, it's hard. Believe me, gang, it's hard. But then, you know, we have things that are working moderately well. Gold is still in a decent holding pattern, and I think it's going to continue to move in our favor. We have some long positions. Buys, double greens are always going to be better. We've been in and out of this trade, this particular name, twice in May alone. We're going to stick with pullbacks and things like WMB. So we do have names coming out of May. And it's funny enough, the double greens, which do exist out there, have continued to be where we're getting the best results. So, you know, we want to find the double greens, but the frustrating part is they're not necessarily there. We've had a bond trade in the 10-year note that took the scenic route, but it too now is coming around. And when you learn to scale in and scale out, you can take small losses, but still keep a conservative entry. Right? I think some of you know this because you see me in the rooms or you're in the Sector Secrets Mastery. So I'm just reiterating some of our basic guidelines. And so with position sizing and scaling, that's how we negotiate a lot of where we are in this market and with this kind of behavior. All right. So I hope that makes sense. And Relux, yeah, I see your question. I don't think we're 12 of 13, but it doesn't really matter. If that's where you're at, that's where you're at. Right. But the idea is, how are you position sizing right now? And when we do take losses, and we will take losses, make sure that you're position sizing in such a way. And we've had a couple of different position sizing videos that teach you how to deal with, okay, Rag, I'm losing. How do I stay on with the plan, but deal with the fact that I need to adjust position size and manage risk differently than when we were on a tear through February, March, April, and most of April, when we were just on a tear, even the first 2 weeks of May. How do we deal with the adjustment to the downside? So check out both the basic foundational video on position sizing and risk management and the advanced conversation, both of which I've made available to members, and that ought to help a lot. All right, next up is, let's see here, gang. I'm new to my channel. Oh, the Simpler Trading channel. No worries. When do I start using indicators in your trading and why? What are my top 3 indicators? My favorites are the ones that are available for free, Volt, over at countdowntrader.com. And that's where I would highly, highly recommend you start your journey with some free indicators and then explainers about what's happening in the current market and how I use these indicators in the current market. All right. Natural gas. Hey there, Tyler. Seems to have bottomed again. It seems to have retraced. I agree with you. I have an open, I believe we have an open order for UNG to be buying it as it sinks down. We need a lower low. I feel in some ways that I missed a really nice opportunity on the 31st of May. But if it does pull back again, now remember, we are we are rolling out of that seasonal uptrend. Doesn't mean that we don't have a technical uptrend. Remember, seasonals and technicals are not necessarily going to always agree and move in the same direction. But to your question, it seems that if we move down, and because I'm trading UNG, Tyler, that's what I'm doing with the Sector Secrets Mastery folks. I won't trade it pre-market, and I actually don't recommend most traders wander into two specific futures contracts unless they're higher risk tolerance, a little bit better funded, and just are a little bit more seasoned. A futures trader, that's silver, that's natural gas. They can be wild. The dollar per point movement can be very, very high, and they can cause a lot of damage really quick. And it's not about how much can we make if we're right. It's how much am I going to lose if I'm wrong. Going back to the question about losses and position sizing. So I like the movement lower. I'd like to buy it, and it's really at this point not going to start being a viable level till about 27.70 for me. So if we get down there, boom, we're going to be in business at an aggro position sizing. All right. Next up is, hang on, gang. Walmart. Sure. Trying to grab some symbols that we don't always talk about. So Walmart's one of them. So the question is, what's my opinion on Walmart? It's a downtrend. So it's not opinion. It's analysis. What I try to remember is it's always process, but I understand. I understand what you're saying. It's always process. So structure, grab candles, more structure, multi-trend, more structure. And then where are the resistance levels that I would look to for a long put or short Walmart position? So I'd like to see it rip to about the 21 or even inside the wave and then get to work. All right. And Relux, if you have questions about the mastery, just ask them in the mastery where I can, have a little bit more time than 20 minutes and a lot of folks' questions. So that'd be great. Just ask them in the mastery. I'm happy to tackle them there. We have our 90-minute Ask Me Anything session today. Happy to go over whatever questions you got. All right. Next up is, so that's Walmart. Raphael, that's Walmart. I need a higher bounce. The 13 is not a big issue. It's established, but for me, it's not something that usually really catches my attention, but it does seem to be with the Darvis there kind of stacking up pretty nicely. Maybe consider the 13 aggressively, quarter position size, but I prefer really to start my retracement, my exhaustion, where I believe that we're getting a tradable bounce. I usually start around the 21, but 13 does seem to be viable here. When you got 13 and the Darvis, hard to ignore that level around 130. All right. If I look at the hourly chart, double green and gray. Yeah, the gray is just yellow. And I forgot why the code goes gray. You can ask the Lorna bot in whatever room you may be in, Avi. That gray is just a variation of yellow. And for the life of me, I don't remember why it goes gray. But it's just a neutral. It's just a neutral. Yeah. So you got it. So when we look at, by the way, for those of you wondering, what is this yellow-green thing we're talking about? What it is, I think it's just a limit on what the system can actually draw. I think it's actually just a limit. So whenever you see gray or just nothing is there, it's neutral. I believe it's just neutral. Oh, because it doesn't match anything. So bot, would that be generally just neutral? That'd be a neutral read in there. So this is clearly bullish. This is a neutral trend with bullish momentum. Here we have bearish momentum with a neutral trend. And then currently we're just straight up red over red. So it's a bearish momentum, bearish trend. And it's just neutral, and there's nothing to draw. It's just a weird limitation within the platform, but it is neutral. All right. Okay, gang. So again, if you didn't check out the non-farm payroll live analysis, live coverage, check it out at the Simpler Trading YouTube channel. For my mastery folks, if you have questions, we will have a 90-minute Ask Me Anything session, 2:30 to 4 p.m. Eastern, every single Friday. Come bring the questions. We'll take a look at everything step by step, candle by candle, and tackle those questions there. All right. So in the meanwhile, enjoy the rest of your morning. It is a caution day. We do have the aftermath of non-farm payroll. Likely, we're going to see that 8:30 reaction echo forward, which should reflect a little bit more pressure on the overall averages, S&P, Nasdaq, Dow. And I'd really like to see some continuation in gold, some continuation in the bonds. I know some of you are in the 30-year, all those macroeconomically and technically, gang. We talked about this on the Tuesday video, should be heading lower. So we're very much on track there. Now, the short squeezes we saw, yeah, there's going to be some things that we are going to be out of just because of the volatility, but that is by design. Take your losses while you can, not when you have to, gang. I know those paper cuts aren't fun. It's a whole lot better than losing a finger, you know? All right, gang, have a great one. I will see you all for the Sunday weekly notes live show. We got to rename that thing at some point. And take care. Be good to each other.